I'm Charlotte McLeod with investingnews.com, and here today with me is Dave Erfle, editor and founder of Junior Miner Junky. Thank you so much for being here. Good to have you.
Thanks for having me again, Charlotte. Always great to talk to you.
It is really good to talk, and today it's going to be a rapid-fire interview because we have things to do here at PDAC. So just briefly, here we are at the convention. How is sentiment feeling to you? What is it looking like down on the floor?
It's really interesting because yesterday was like the retail day, right? Sunday's usually the retail day. And you could pretty much roll bowling balls down the aisle and not hit very many people. I was walking around to booths and asking how many inquiries from retail investors you've been getting. Most of them said 1 or 2 or even 0. I mean, you look around and as I know on Friday, the gold price hit an all-time daily and weekly high closing at $20.95 an ounce in the futures market, and you would hardly know it walking around the floor yesterday. It's actually a little more busier today, it seems like.
Yeah, I was down on the floor in the morning yesterday, and I thought it looked a little emptier, but I was like, oh, maybe it's the morning and people will come in the afternoon. So that's very interesting. But let's talk a little bit more about the gold price. So very high gold price right now. Gold stocks, interest low, share prices not doing so hot. So have you seen this type of disconnect before?
I've never seen this much of a disconnect before while the gold price is breaking out. I've seen this disconnect twice before, this much of a severe disconnect twice before, when the gold price was threatening to break down to a much lower level. So in 2016, it's more common to what's happening right now. So it kind of mirrors what's happening right now. But in late 2015, early 2016, the gold price was threatening to break down below $1,000 an ounce. Now it's threatening to break out above $2,100 an ounce. There's something I follow called the HUI to gold ratio. And that's basically the gold stocks in relation to the price of gold. So a mean reversion happened in early 2016 and at the March 2020 low as well, right around PDAC in March 2020. So basically what it was you had the HUI to gold ratio hit 0.09 in 2016, the first couple of weeks of 2016, and then 0.093 in March of 2020, and then it hit 0.094 last Wednesday. So meaning a gold stock mean reversion is about to happen, because the last 2 times that happened, the mean reversion started, and you had huge moves in many juniors and many miners within 6 months.
Okay, so you have answered what my next question was going to be, is when is that gap going to close? So we've gone over that. Maybe another question then is, how are you positioned for that, and what can people do? There's still maybe a little bit of time, so maybe a little bit. So how can we prepare? What are you doing?
Yeah, well, I think that mean reversion started last Friday, and what I've done before this, in anticipating this mean reversion, was I've been accumulating late stage projects with multi-million ounces in the ground that have solid management teams that know how to manage these capital markets, because this is a totally different market than we had the last time when we had low prices like this, and it was what I believe to be the end of a bear market. I think we're in the process of ending right now, but it was a totally different market. I mean, capital was very cheap. Capital's expensive now. And a lot of these companies are mismanaging them, meaning they raise at the wrong times, and they don't have the right feel for the market as to what kind of deal, what's the right deal to take and what's the right deal to leave on the table, and the timing of that deal. Because when the retail market is out of the sector, like it has been basically for the past 12 years, there's been no retail in the sector. So the street is very savvy on what is happening with these stocks. When you see a junior come out with very good news of drill results, the first thing the street's gonna look at is how much cash do they have in the bank now, right? To follow this up on. If they have less than 6 months, the stock's gonna get sold, and the street's gonna keep pushing that stock down because they want to get a cheap finance with a full warrant. They know this company is going to be backed into a corner. They don't have enough money, and they're going to have to take a finance they don't want, and they're going to have to give out a full warrant to do it, probably in 3 years. So what they'll do is they'll wait for that to happen. They'll participate in the placement, and then they'll strip the warrant, meaning they'll sell the shares after the 4-month holding period, and they'll just keep the warrant. So it keeps pressure on the stock because there's no retail money that doesn't understand what's happening to bring the stock back up, and the street knows this. So they're keeping pressure on these stocks. So they have to cover short positions, right, to make their money. But they're waiting for that signal, and it usually happens with the miners first, right? They start going up first. You usually see the short covering signal. And like I said, it's when it happens when that HUI to gold ratio gets a certain level. I think it started last Friday. I don't know. I could be wrong. We'll see.
We'll see. And we'll hope to post this quickly so that gets up and out there. I want to follow up on a point you made at the beginning of that answer. So you're looking at companies toward the later stages. And I have to ask because, you have junior, minor, juniors are in the name. So are you looking at the juniors, or what would make you look at them?
Yes, they are juniors. I mean, these are juniors. They're a lot of them are sub 100 million market cap, but they have to raise a lot more money than what their market cap is, 4 or 5 times their market cap in some cases. So you have to make sure that they have the right shareholders in their stock. They have that access to capital. They have some strategic partners and some majors, right? So, I mean, because you see a lot of these companies that are in that position where they put out an economic study, and then all of a sudden the economic study was outdated because of inflation, and the capex on their project was blown out, right? And they all of a sudden they have to raise a lot of money at a lower share price and blow out their share structure. So these companies are being vultured by a lot of these other mid-tiers or majors, and they see this happening, and they can swoop in and pick up these projects for a song. So it's kind of the opposite of what they were doing with the last time the gold price was around $2,000, 12 years ago, where companies were basically going after ounces at whatever cost. It didn't matter to them. They were buying low-grade bulk tonnage projects, large projects that weren't economic. They just wanted the ounces. So now we have majors concentrating on balance sheet health, share buybacks, and they're not concentrating on adding ounces in the ground just yet. But some of them are starting to take strategic placements in these companies so they could do so later. But this is what is happening now. Is kind of like you see signs of a bottom in what I was talking about. So. But we have to have that short covering move start, because all bull markets begin with short covering, and then you see the value investors waiting on the sidelines to see levels hit to where, okay, now it's time for us to come in. And this sector is so tiny, it happens so quickly, because if you take the entire market cap of the mining sector, it wouldn't even equal the market cap of Home Depot. That's how small it is.
Okay, and I know we have to wrap up soon, but ever so briefly, silver. Do we have a little bit more time if we want to look at silver? Because silver tends to move a little bit later than gold.
Absolutely. The level to watch on silver is the $26 level. There's very stiff resistance up there. The initial resistance is 24. I don't know. It could be close to there this morning, but the level to watch is 26. It's $26. But if you take a look at the silver stocks, I mean, they're hated right now. I mean, silver is a fantastic opportunity right now as far as the stocks are concerned, but you have to get into the right ones. You really have to do your due diligence and make sure you get into the right ones, because all it takes is 1 or 2 of those. If you get into the right ones, you can make 10, 12, 15 times your money awfully fast in a couple of years. I mean, this is my 2 biggest wins when I first got into this sector were from silver stocks. So.
All right. Well, we're going to wrap it up there for now. Thank you so much for coming and taking the time to go through a little bit of gold and silver. I feel like we packed in a lot of good information. Would love to have you back and do a longer discussion at some point, but thank you.
Thank you very much for having me. Always great to talk to you. Thanks.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is David Erfle with Junior Minor Junky.